morning and welcome back to the Sydney Tokyo session for Thursday Friday overlap. It is 27th, 28th of February. Very good morning from those who are joining from the eastern side of the world, and good evening to those who are joining from the western part of the world. We can have a quick look to start with on the daily chart for euro. And what it's doing right now is okay. First, the larger degree count. There's no doubt in place. You've got no doubt about euro having carved an impulse higher, indicating the larger degree trend is up, followed by a corrective decline A, B, C, bouncing right at the 61.8% Fibonacci ratio as well. And what we are seeing right now on the hourly chart is that wave 3 at a minute degree is kind of progressing, and in fact we've rather than the hourly, we will shift to the 4 hour. The view is better. So first things first, the small arrow which we had updated last session is also completed by the path. So the price action is now complete, uh, mostly complete on the south side, which we are predicting as wave 2. Now if you look at the price action, we've got minute degree wave 1 and minute degree wave 2 in place. Just for a moment, if I remove this Fibonacci applied on the first wave of the minute degree, and if we do apply this on the minute wave 1, I think we are very close to the 61.8%, or if not the 61.8%, we are close to the 50% mark, which is 373. And if you remember, since the last 2 days, we have been talking about taking partial positions on the long side and having some space left to buy euro lower between the range 330, 350. So that is not exactly arrived, but we are almost there. All right. So in terms of the wait, I think we should not wait further. It is good to take profits not take profits, but if you have taken partial profits earlier with a few positions in hand, it's now time to get in on the long side again and build the euro long positions with an overside or inside of price action pushing higher towards the 750 mark and 1100 mark. All right. And the stop loss recommended is around 1.0200. So ideally, it looks like uh, I think if the third wave, that's wave 1 of 3, then it could be wave 2 or 3, or even if we go a step further, we put this wave 1 here and 2 there. It could be another lower degree wave 1 and wave 2 in place as well, with the third, fourth, and fifth wave. So the third wave would be extending in that case. All right, so quite that is also possible to label. I'm readjusting it again the same way we did earlier. But if the third wave is extending, it's already at 61.8% bounce. That's what I'm trying to say. Because we've got wave 1, 2, and 1 and 2 again. And that is the 61.8% of the previous rally already. So by all means, I think we are now setting up nicely for a continued rally if not from the current price action, but just about 10-20 pips lower. But it's not going to take much time for bulls to come back in control. And exactly what we discussed the last Friday or last Thursday, I remember, when we were talking about 6 trading sessions left. Today is the last trading session of the month, and we were predicting or we were projecting with respect to time perspective that if euro drops down to 340 350 range by Friday the 20th, the stage would would be nicely set up for another rally in the month of March, correct? So that's what exactly is seen happening, and it won't be long that this path is also being filled up. All right, so there's no change structurally. Trading point of view, again, we can commit on the long side, the stop around 1.02 and the target around 750 and 1150 respectively. All right, so that's about it. The euro USD, we can move to the dollar index now. Let's go through the euro dollar index and pound and gold, and then we'll cover the coins and indices. Once again, it looks quite soothing to the eyes as well. The 38.2% touch and price action almost. See, we wanted to sell additional around 750, 790 range. Now, dollar index has not completely reached. It doesn't happen all the time that it goes exactly where we want to, but it is almost there. I mean, 107.30 is not too far. And who knows if the third wave is extending, this could be a major reversal point itself. All right, and I'm not ruling out the option of the third wave being expanded, the third wave extending as well. So the wait is kind of over, please, and it is better to position ourselves again on the short side around 107.21 right now, and stop loss would go around 109.85 and take profits step by step 105, 101 and 93 going forward. So there's no change structurally, there's no change trading point of view. I think the wait is over now, and today being the last trading session of the month as well, it's going to be an absolute uh, it's going to be a perfect match or the setup for March decline. You see that RSI stretching a bit to 65. That could be the second wave actually. Even the euro could have dropped to 30. I didn't see that, but let's find out. Three extremely high potential trade setups are there with us right now, and it's just a matter of time before they start yielding profits. This guy is, I mean, it's been so shy, uh, but whatever we have on hand is better than nothing actually. All right, not to have anything is this is better to have at least something in terms of retracement. 25 or close to 2600. I'd be more than happy to close that down the path, and it's okay. It's a three-wave corrective decline already. So again, the weight is over in pound. 2450, 2500 was the range that we were expecting, but it's okay even if that is not coming. We've got at least the 2600 handle with us, So let's live with that, and let's commit ourselves on the long side again. We're just adjusting the path a bit with wave 3s and 4s and 5s. So there you are. The structure remains absolutely bullish, strongly bullish in fact. And if you're anyways inclined for pound, then this should be the place where we should enter again or add positions. Stop loss goes to 1.2250, and potential targets are around 2800 and 3200 respectively. All right. Next is gold, and gold is finally they gold pushed one more wave lower. Remember, we were discussing this last session as well. To complete that five wave structure, another wave lower was required, and that is what gold has exactly done. So let's shift price the waves a bit on the right hand side, also the wave structure here. And if it is an ABC underway, it's quite possible that ABC is already underway. Or it is also possible that now we have a neat little five wave decline, sorry, not rally, and possibly now we could see a corrective wave higher. Not exactly the 28, 29, but possibly 21. If it goes back to 2920s, it would be a great one. So either from here or from 2921, uh, let's prepare for a decline. I would not rule out a possibility for a corrective rally, because even if it wants to carve a head and shoulder, that particular support is also being taken now. So I think we are good in projecting that wave 3 minute is over, and we are now looking for a where's wave 4 actually? I don't know, it could be on the longer time frame, but wave 4 could be on its way uh, towards the 2800 or possibly 2750. And who knows, even if the expanded flat ABC minor degree wave 4 could be unfolding, I'm going to look into that again. I will bring up if that remains possible as well. If that is the case, then gold is gone for a long, long, long way lower. All right. So trading point of view, you can take partial profits, brothers. We held our short positions from 28 levels on February 26th, around the same time, just 1 hour around the same time. Not exactly this time, but an hour after what we are speaking right now, on 26th of February. Uh, the short was issued at 29.28. You might want to take profits on that. Okay, and sit on the sidelines, please. There could be a reversal or a pullback rally at least, taking us back towards 2920s. Let's look at the RSI. See, the RSI is already beginning to diverge bullish. So there could be a bullish pullback, and we will get yet another opportunity to go short there. I'm not ruling out a possibility of an impulse lower. So if it is an impulse lower, the move is incomplete, and it would print one more low at least below 2867. You never know, it could be a double zigzag or a triple zigzag in the making. Corrective waves are pretty complex to try and project early in the early stages. They will only reveal themselves when they want to. But at least for now, it looks like some kind of pullback should be underway. All right. So let's move on to the indices first. I think during the New York session, what we were discussing already happened. There you are. The path has been filled again, and it's a delight to watch. Correct. 43,200, but I think the drop is still not complete, sir. Maybe it would dig in a bit further. I think that was wave 4 and expanded flat A, B, C, D, E. So let's shift it a bit on the right hand side. Ideally, has it gone into the, no, it has not gone into wave 1, so that's technically absolutely perfect. And if we also feel back, then I think it's almost over. I mean, it's just a couple of 100 points left. So you know what? It's 1, 2, 3, 4, and 5 done, brothers. I think it's done. Maybe we'll shift the fifth wave here or a bit lower, but I think maybe wave 5 is over here. So there could be some kind of pullback going forward, or one thing is clear: the third wave is extending possibly. So this could also be wave 1 of 3. We've got to have 2 of 3 and 3 of 3 lower again, but we are not changing any price action Fibonacci terms. It's good to see price action lower already, and let's hold on to the short positions. We are short from 43,800, and we are definitely more inclined to add further going forward. All right, SPX 500 now. Look at that. It's an amazing counts coming true, right? So is it uh, is it a five-wave decline which looks complete? It's possibly just about one more low. The best part is we are very close to the major support at 5,811, and I would still give one more chance for a Friday close below that 5840 or 5811 mark, because that is going to set up the stage beautifully for for an upcoming pullback or a pullback rally early March, and it could extend through March as well. But then what we are going to see is a, a bearish reversal of solid magnitude in terms of time, in terms of price, in terms of everything. All right. So this is an excellent case of an elite wave theory, 5 down followed by 3 up. We are going to witness actually the three-wave rally. So that should be somewhere in early March. Okay, Nasdaq again should have print one more low, so we will get a chance to enter on a pullback. Look at that. Did I open another one? I think we are already, yes, this is the Nasdaq. Look at that, sir. And who says that the elite wave counts are difficult to project and they are complex structures? We can't do that. I mean, look at that path being filled so precisely by the markets. So, okay, it was a bit unfortunate for us in the coins. We did not reverse, but it's okay. I mean, that happens in trading with anyone. The good part is that we have identified the trend, so it's just a matter of time before we are going to cover up what we have stuffed out. All right, so nothing to worry on the bitcoins and Solana. We'll catch up there as well. But what is more important that is that in all the other instruments, including euro, pound, dollar index, gold, Dow Jones, SPX, projection of Nasdaq. Because remember, we are yet to. Of course, we've sold in the portal already, so that's another story. We can take some profits there, short-term profits, and we can prepare to sell on a rally again. But we are, oh, that's a good one actually. See that bullish divergence. This is something which works almost 10 on 10 times. Only gold is an exceptional case where it elongates and prolongates the fifth wave. But if you look at the Dow Jones or SPX 500, or let's have a look at that Dow Jones as well and the SPX 500. Yeah, that's a significant bullish divergence. So it's time to take some profits there and prepare ourselves for the next decline. Let's have a look at SPX 500. I like really watching this RSI divergence. All right, it's almost there. I would say that was the last price low, and then we've got a couple of lows, but the RSI is hanging around higher levels. So it won't be a bad idea to take some profits off the desk, right? But the thing is that I don't want to miss on the bigger drop going forward. That's why I'm not issuing the portal to take profits. But I think we'll do that soon. All right, now the Bitcoin. Did you see that Bitcoin dropped lower, brothers? Around I saw 82. I think it went up to 82. So it is quite possible that a bottom is in place, or maybe it wants to dig lower one more time. But I think it's an impulse and a corrective wave already on the screen. But I think we should wait for one more day before the dust settles around, and we can, rather than going aggressively long, I would be very happy to sit on the sidelines and watch out for a corrective rally to materialize and then go short. Even here, there's a sideways action, or possibly that wave 5 is over, and a pullback rally is just preparing itself to go on the north side. So maybe we we just need to sit tight for some more days or while as the pullback materializes, or maybe we can address a counter trend rally if possible. Please watch out on the portal. We'll be shooting out a trade if aggressive longs are still possible to take. All right, but we are not going to commit unless it looks very promising. This guy looks promising. Solana completed its five-wave decline. It should be on its way very soon for a corrective wave higher. All right, so those are the stories as we move into the Tokyo Sydney overlap. And let's bring the current session to a pause, and we'll be back again during London times. Until that, once again, thank you for tuning in, and until the next one, as always, please do take care and God bless. Goodbye.